Hey, what's good? It's your boy Larry, and I'm back at it again. You know what it is, guys. So basically today is a very different video, right? I'm going to make a very different video, first lesson actually, and it will be how I trade gold with a completely clean chart. So all right, so let's just get into it. You know what I'm saying? Yeah, I just want to make this video a bit short, 30 minutes, and yeah, man. So first things first, I hope you guys can see the win rate, right? I have a 75% win rate. It was actually 81 in the morning, but I just took a loss during London session here. I took a loss during London session, and that is the reason why it went back down to 75. But then we will see how it goes uh, throughout the day, right? So yeah, we're gonna start off with the lesson here. Let me just grab my notes. Yeah, I will also post this video later on my main videos, right? Yeah. So basically, this is what's gonna go on here. I'm gonna give you guys the first point. I'm not gonna beat around the bush. We're just gonna get started. All right, the first point is, why do I not use indicators, right? Most indicators, guys, are based on price, right? Price comes first, indicators come second, so they are always lagging. That's one thing that you should know. The reason why I don't trade indicators is that price always gives us lagging indicators, right? That's one thing that you guys need to be aware of. That's one thing that you should know, right? So focus on price itself. That's why I focus on price action itself. The reason why I don't look at the market in a indicator eye is because I already see price playing out without the need of an indicator, right? That's one thing you should know, right? Another thing is that we need to focus on market structure, right? That's what we need to focus on. So I'm gonna bring up my notes right here. And yeah, something that you guys need to understand. Market structure. What is market structure? Market structure is basically us being able to understand how price is moving on a higher time frame, right? Being able to see the structure, being able to see how the market wants to move, right, on the higher time frames here. So looking at the higher time frames, what is the structure, right? Are we bearish? Are we bullish? That's one thing you need to understand, right? Are we bearish or are we bullish? Based on structure, what I'm seeing here is that price is bearish, right? Why? We are creating um, uh, 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 higher lows and lower lows. You guys need to understand that higher low, lower low, higher low, lower low. So I'm just going to draw up a plan for you, just a short, right? This is a high, right? Basically, what do we do if price goes down? That's a higher low, right? No, I'm lying. I'm lying. That's a lower low, right? A lower low. And then when price comes back up, what is it creating? A higher low. As long as price does not come in this area, right? That's a higher low. Then when price passes this previous uh, low, what are we going to call this one? We're going to call it a lower low. And then just like that, a higher low is going to get created again, a lower low. So this is structure, right? And when price basically changes structure, right? What are we going to see? When price changes structure, we no longer, this higher low is going to get broken in this area here. We're going to see price break in this area, move above, right? This previous higher low, right? And then we're going to start seeing price basically create new highs. Now we're in an uptrend instead of a downtrend. Why? Because we see a higher, it's a higher high, higher low, higher high, right? This is going to be a higher high, and this is going to be a higher low, right? And then there's going to be a higher high again, just like that, higher high, higher low. And then here, what do we have? We have a high, right? A lower high, just like that, right, guys? So I'm just gonna write them down for you guys. This is higher high, right? Higher low, right? And higher high. Higher highs and higher lows, it's gonna be during an uptrend. An uptrend is gonna give you higher highs, right? And higher lows. That's what an uptrend is gonna give you, right? That's what an uptrend, yeah, an uptrend is gonna give you. And higher lows, higher high, higher low, higher high, higher low, right? And then a downtrend, what is a downtrend gonna give you, right? Take a guess. What do you guys think a downtrend will give you? All right, so a downtrend will give you a lower high, right? A lower high and a lower low. That's what a downtrend is gonna give you, right? LH and LL, the lower low, right? Yeah, it's gonna give you a lower high, right? This is a high, this is a low, this is a lower high, a lower low, a lower high, a lower low, so on and so forth. So that will be a bearish move. And once we change, we're gonna create higher highs and higher lows, and that will be a bullish move. So this is basically what structure is. And yeah, I hope I have explained that better. The only reason why I'm pushing fast like this is that we are nearing Asian session, I mean, New York session here. We are nearing New York session and I'm about to go live. So keep that in mind. All right. So, okay, guys, the second thing is liquidity. What is liquidity? What do you guys think liquidity is? What do you think makes up liquidity and all those type of things? So we're going to go into the lower time frame here and I'm going to show you what liquidity is, right? Where is where is that? Oh my goodness. Where is it? Where is it? Where is it? Where is it? Oh, there you go. There you go. Right. Based on the notes, right? Based on the notes, we have liquidity here. One thing that you need to understand is liquidity. The reason why I trade price is because I am able to identify liquidity, right? Yeah. Okay. So I'm going to have my support and resistance here, right? For example, let's just say, let me just move a bit here. And then I'm going to have my support and resistance somewhere around here. Like support and resistance can be anything, right? So we're going to just draw up a support and resistance somewhere around here. And we're going to call this support and resistance, right? And support and resistance, honestly speaking, is not objective. It is subjective and it is not the end all be all when it comes to price action, right? But it is excuse me, yeah, you need to base it based on what you understand or what you see, right? So based on what I understand, what I see, this is what I see, right? This is where what I see, this is what I see, right? I see my support right here. I see my resistance right here. It is a subjective thing. Don't take it too personal. Don't take it too hard like that. Just know, like, just have that thing, right? Just have your own style of drawing support and resistance, right? We have current support and resistance. Some people draw support and resistance like this. So it only depends on how you want to see it, right? Right. So liquidity is where a lot of traders have their stop losses, right? Have their stop losses and pending orders. The market is attracted to those areas because that's where large amounts of orders are sitting. So what does that mean? That means that we have trader A and trader B, right? Trader A is the one who enters price where liquidity takes place. Where is liquidity? Right? Liquidity is going to be areas like this, right? Areas where you find price basically tapping the buyers and sellers. This is where large orders are, right? So basically, a lot of sellers are right here. So liquidity, what liquidity does, or liquidity grab in that case, does is that price is going to come into this area where the orders are and basically take a lot of people's orders, come back into the range, right? Again, also right here, we see that a lot of sellers got grabbed right here, right? This is liquidity grab. This is where a lot of sellers had their buy stops or their sell stops or whatever, or their execution price, or whatever you want to call it, right? And what basically happens is that price would basically tap them in and basically take them out, right? Because price has not given enough confirmation yet to keep on moving. So what price would do is tap the buyers, tap the sellers, and basically come back inside the range and trade in the range here. And basically, yeah, take them out. Most of them blow their accounts right here and all those type of things, right? So I hope I explained that a bit better. Right. So what is support and resistance? I think I also explained what support and resistance is. Support and resistance would be where price basically rejects, right? So resistance would be where it rejects uh, above, and support would be where it rejects below. So where price basically creates support, we see a candlestick, basically that's a sell, and a candlestick closing bullish here, which creates support. And right here would see resistance, a bullish candlestick, and the next candlestick would be a bearish one where price creates resistance. I hope you guys understand that, right? All right, so we're gonna move on to session trading, right? Session trading, that's another thing that I do when I trade with clean charts like this, right? Session trading would be different times, or maybe let me just say different sessions. So we have Asian session, London session, and New York session, Sydney session as well, which is something that I've never traded, Sydney session, but I've traded Asian, London, and New York. So if you're trying to understand the sessions, you need to be available throughout those times, right? Different times for different countries. So I'm not going to tell you a specific time because I don't know where you live. I don't know where you're from. I don't know where your country is. But those sessions basically mean there's high volume. High volume means price basically moves a lot, right? Moves a lot, and there's basically moves that you can grab off of the chart based on those times, right? All right, so that would be it. That would be it for this one. Let's look for the other lesson notes here, and then we're gonna keep it moving. All right. So other lesson notes is high time frames and lower time frames. We need to keep this in mind, guys. What is high time frames? What is the significance of high time frames here? I'm gonna give you guys a second to think of that. All right. So higher time frames basically controls lower time frames, right? That's one thing you need to understand. What is a high time frame? High time frames is basically this, right? This is what you would see usually in the market during higher time frames, right? During high time frames, what would you see? You would basically see the market moving a particular way. So let's look at the current candle right here. The current candle right here is basically bearish, but we do notice that we have a gap, right? This gap might just want to get filled in the long run. Maybe right now during a New York session, or probably tomorrow later on in the day, or price might just want to keep on moving lower here. So what do we see? We see that price has created resistance here. So basically the high time frames should give you an idea, not necessarily to say you're gonna get the buys or the sells in this area, but it should give you an idea of what price is basically going to do throughout the session, right? So right now we do see that price is basically bearish. We might just want to come back in this area. We've already tapped previous resistance here, right? This is previous resistance. We do see that price has also tapped support, but it broke out, right? So it broke out. So it's playing around these areas here. So price might just want to come back and push higher here. So you need to look at the higher time frames, because the high time frames basically control the lower time frames, right? So looking at the 4 hour time frame, price has created some sort of a support. Maybe price might just want to move higher. Maybe price might just want to move lower, right? We also come back to the 1 hour time frame. The 1 hour time frame here, we do see structure. There's a trend here which I drew up on the 15-minute, right? This is a trend line which I drew up on the 15-minute, right? And what do we see? We see some sort of a break of structure, right? Break of structure. What is a break of structure? Break of structure is when we have a downtrend and price basically breaks above. Right now, it basically pulled back, tried to create a low, but looks like price wants to push higher here. So this type of break of structure, right? We notice it usually on the lower time frames when we are trading, right? And right now we do see the break of structure. Right now we are currently bullish on the 1 hour. And then you come to the 30 minute. When you come to the 30 minute, you look at the 30 minute right here. You want to understand what price is doing on the 30 here. On the 30, we have a closure with no top wick, right? Price wants to push up, maybe, maybe not. So we will see how price wants to move here. But do you guys see how I drew this trend line here? This trend line is basically giving us clear price action, and we do see that price basically gave us a what's this, a break of structure, and price wants to basically move higher here. So that's one thing that you guys need to understand when it comes to higher time frames, lower time frame correlation, right? Everything just plays a part. Everything just plays a role. This is where I drew up my support and resistance, right? I drew up my support and resistance here in the 15-minute time frame here, and what I saw is basically price pushing in these areas, right? So every time when price came into this area, it reversed. When it came to this area, it reversed, right? Creating support, which pushed up, creating resistance, which pushed down, creating support, which pushed up. And what did we see here? We saw a breakout above, right? We saw a breakout above, right? Price pushing all the way higher here. So one thing that I did, right? I took a sell somewhere around here during London session. I took a sell somewhere around here. Unfortunately, I had my stops in this area at 44.76 here. That's where I had my stops. Price broke down, right? Instead, price actually took me out. Well, there's a mistake that I did, right? One mistake is I should have had my stop losses somewhere around here, right? But I saw price pushing lower here, so I was a bit too quick, a bit too edgy to move my stop loss, and I actually got tapped out here. After price tapped me out, I told the crew, I was like, hey man, after price taps me out here, hey, that's unfortunate because I'm expecting to see price push lower here. And immediately after tapping me out, a few minutes later, I saw price going down here, but I didn't take the trade. Why didn't I take the trade? That is something we are going to discuss a bit later here. All right. So yeah, I hope you guys understand that. I hope you guys understand the correlations of high time frames and low time frames. So we're gonna go back to the high time frames here, and I'm gonna delete this notes. All right. So we're gonna also look at one more notes. Where are those notes? Where are those notes? Right, right here. All right. Why most traders lose? What do you guys think is the reason why most traders lose? A lot of traders lose because they overtrade. What is overtrading? They revenge trade. What is revenge trading? So overtrading is basically opening more than required trades, right? Professional traders only open 1 to 2 trades a day, right? At most three, right? And if they are really, really, really good, they would open 4 trades, right? This is like the pros. Like this is where uh the top professionals would be, and this is where I am, right? 1 to 2 trades, at most three, right? This is where like your retail traders and all those type of things, all those good traders land, right? This is where we trade. This is how many trades we open on a daily basis just to keep on uh, 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 um, saving money or making sure that we don't take unnecessary trades here, right? But what do you think a beginner trader would do? Right? This is what you call over trading. This is what I used to do back in the day. I used to open something like 16 trades a day, 17 to 20 trades a day. And obviously, this is where price would tap me out. This is where I would have a problem, right? This is where I would lose a lot of money here. Why? Because opening so many trades in a day means that you don't know what you're doing, right? You don't understand what direction of the market is, and you don't understand how price wants to move. But once you understand all of these things, then you will cut off the noise and you'll choose one trade. What is that one trade going to do? You understand that you want to see price move down, right? This one trade is basically going to fill this whole setup, right? But now, when you're a beginner trader, right, there is a setup like this, right? Now, 16 trades, how would you take that? You would take a sell here, Price would come back, you'd be confused, then you'd want to buy, then you'd want to sell again, then you'd want to buy again, then you'd want to sell again. And this is where a lot of traders actually lose their money here. Right. So that's something that you need to keep in mind of. Make sure that you don't overtrade, you don't trade, open too many trades. What is revenge trading now? Revenge trading would be, let's say, for example, I have uh, three bullets for the day. What are these bullets? What am I talking about when I say I have three bullets? I have three trades, maybe one trade for Asian, one trade for London, one trade for New York, right? Now, this would be my plan, right? This is the trades that I want to take. These are the trades that I want to open, right? So, what would happen? A lot of traders would what? Instead, let's say during Asian session, maybe take a loss, right? Then you have minus one trade. Instead of waiting for London session here to open a trade, these traders would what? They would be like, ah, man, I just took a loss. Let me double down. I'm going to go 2-1, right? I'm gonna risk 1-2 or whatever. I'm gonna risk 1-2 again during this session where you took a loss, right? Because you just took a loss and you're seeing that price is maybe taking a downtrend, and then you'll be like, oh, nice, price is moving lower here. So I just took a loss because price gave me just this rejection where price basically moved up here, and then you'd be like, okay, let me just try and enter the sales again just to see price move here. And then instead of actually making money here, price would probably tap in this area and keep on pushing higher here. And then you'd be confused. You'd be like, hey, I was actually bearish. Why did price move higher here? The only reason is because you have already taken your bullet. You need to stay out of the market, save yourself some time, save yourself some energy, and also save your mental state, right? Because you have another chance during this session and you have another chance during this session. If you lose all these sessions, it's totally fine, right? At least you only opened three trades, no over trading, no revenge trading. You waited for the setup and then you were patient enough to trade the setup, right? And that is just about it, guys. The only reason I have a 75% win rate is because I do not do all of these things. I don't overtrade, I don't revenge trade, and uh I don't trade every candle, and I also don't move stops, right? Let's say, for example, I have a stop loss set up in a specific area, right? For example, this is the stop loss that I had during this session here. Let me just give you guys a picture of what I'm talking about, right? So I had a stop loss during this session, guys. I only have like 5 minutes left, so I'm just gonna uh brush up everything. I had a session doing what's this? Oh, shorts, yeah. I had a trade right here. And yeah, I initially thought maybe if I could put my stop losses in this area, price would move, right? But what is the mistake that I did? The mistake is I second guessed myself. After second guessing myself, what did I do? I was like, nah, these stops are too high, man. Let me just uh take put my stops somewhere around here where price actually rejected in this area. Unfortunately, that wasn't supposed to happen, right? What did price to do? My moving off stops here actually put me in a compromised situation, because after moving stops, price, what did price do? It tapped to me, right? Because I had my initial stops right here. I should have kept those initial stops and waited for price to do its thing. But because there's human error, there's a lot of things that come into mind when you're trading, a lot of thoughts, a lot of mind changes where you're like, hey man, I should have done this, I should have done that, right? So that's basically what I did, right? I'm like, nah. I feel like these stops are too high. $180 loss, man, I'm not willing to take that. I'd rather take an $80 loss, right? And then I pushed it from $180 loss to an $80 loss. But this is what happened, right? Price basically pushed, put me in profits for a second, pushed up, took me out. After taking me out, look at that sell move, guys. This was a wonderful sell move. I took an unnecessary loss here, and this is why traders lose, right? Losing, you lose because you move stop losses. If you have your initial plan, trade the plan and plan the trade. I always tell my students that right? Trade the plan and plan the trade. If you had your initial plan of stop losses around here, let price tap your stop loss. You shouldn't care how much you're losing. Don't even look at your P&L, right? Only beginner traders look at their P&L, right? P&L, profits and losses, right? Only beginner traders look at this. You shouldn't look at price or the money that you're making or the money that you're losing. Focus more on setups, focus more on the trades, focus more on the plan, and let price do its thing until um, you get your profits here and you go out a profitable man. So this is one thing that this is one mistake that I made today. I focused on the P&L, right? I focused on the P&L. I looked at my money here, and I started, getting a bit edgy here, and I was like, oh man, let me just move my stops to this area here so that I can just save myself some money. Instead, what happened? Price tapped me out, right? Because the stops were not supposed to be here. And I've seen price play out like this many times where price would tap me in these types of stop losses and price pushing back lower. So what should I have done? I should have just waited for price to do its thing in this area here, right? And potentially give me the money I was looking for. So that's another thing that yeah, it's another mistake that I did, and that is something to take note of so that I don't make that very same mistake when I trade again. All right, yeah, guys, I think I gave you guys enough nuggets. This is something that I want to start doing, giving you guys short lessons, maybe also going through our trades on a daily basis, looking at the trades, why the trades could have been a loss, why the trades could have been a profit, and yeah, man, let's improve, let's grow together and become the best here. And yeah, if you liked whatever you saw, if you like this video, guys, follow, like, and share with your people. Make sure that we grow this account. Make sure that we grow this page, guys. Let's grow. Let's become big. Let's make sure that we are the best forex channel on YouTube, or at least let me just say in South Africa, guys. I'm not aiming too high, but I'm aiming for something, right? So let's grow this channel, guys, and let's get those followers. And only you guys can help me out. Put a like if I dropped enough value for you. Put a like, and if I didn't drop value, put 2 likes. Double tap. All right. It was nice having you guys. It's your boy Topo Larry, and I'll see you guys on another one. Peace out. Oh, by the way, join me on Asian session. I mean London, New York. Join me on New York session, guys. Join me right now. I'm about to go live for New York. So peace out. Love you.